RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief, our public broadcast here. Yeah, try and do about maybe 15-20 minutes here. So it's 5 minutes past the top of the hour here on the West Coast, 9 o'clock. So see if we can have this wound up by say 20 after, 25 after kind of idea. Today is the 12th of June, as we have sort of said, slowly marching our way through the month of June. I guess almost halfway point. I guess that'll be this weekend. Today, Wednesday, this is FOMC day, so we are going to be eagerly waiting, anticipating good old Jerry's presentation here to the public in about, I guess, about 2.5, 3 hours roughly. And everybody should try and remember the number one rule when it comes to Fed Day. It'll be interesting. Maybe post in the comments there over on YouTube if you know what the rule about Fed Day is. Then maybe at the end of this broadcast, if somebody can remind me, I will tell you what the number one rule is about Fed Day. Needless to say, and I've often found myself, I don't trade very well. I think it's actually because a lot of pros don't trade, and so as a result, the algorithms and bots just have a field day with the market. But I don't usually trade very well through Fed Day events. Well, actually, even Fed weeks, to be honest with you. But especially Fed days, and this is a 2-day meeting, yesterday and today. So as a result, no live trading for me. Did have some pretty wild price action there this morning. Yeah, threw on a couple paper trades. Actually had a nice short in crude following the EIA release, but no real money here today. So I suppose that's the way it goes, eh? When you paper trade, you knock the cover off the ball, right? Isn't that how it always works? Anyway. So I do like how we've created this agenda here for us. I'm going to have to maximize the screen so I can't see you talking. But first and foremost, at the top, I have to say, I really like what I'm seeing out of the breadth indicator of late. In essence, we have basically a hurry up and grind on the S&P 500 on basically the stock indexes. And you can see how we're kind of sitting in no man's land. I ideally really only like to get really excited about the breadth and about the market when I see an egregiously overbought or oversold condition, and then I know, hey, we've got something to work with here. So it is interesting to see that the stock market on balance is kind of just drifting. And if anything, I really don't like what I'm seeing out of the stock market right now. Because this is basically historically gone by. This is what they call a rising wedge, where you have prices sort of grinding their way higher, higher lows, higher highs. But as you can see, it's like energy is compressing. For whatever it's worth, my apologies if charts are a little scatterbrained here today. My computer crashed overnight and I lost all my saved charts again. I swear, the gods, I think, are telling me that I should maybe take a vacation or something. I don't know. But I'm having a bit of a challenging time with these computers these days. So if I do seem a little bit scatterbrained, it's because I lost all my pretty charts that I was presenting to all you guys. I'll have to reconstruct the whole damn thing. Anyway, that's not really your problem. Anyway, so this is like what they call historically a rising wedge. Now we might just blast off through the top here. I mean, I find that hard to believe, but nonetheless, you can see the market right out of the gate here just jumping higher. But man, I'm very, very skeptical about this. And what I see happening is, in a weird sort of way, it's one of these sort of, kind of tale of two markets. Dow, brick and mortar, you can see the financials are like, meh. I mean, we started out of the gate violently higher on friendly inflation data, which isn't really in stunningly friendly. It's sort of like, okay, it's all right. We'll get to it in a minute. But I think as long as the market doesn't see like higher inflation numbers, then the market feels as though the economy itself, like corporate profits and the prospects going forward, especially, like this whole AI build out in our society, really seems to be benefiting the tech sector. So as a result, tech stocks just booming higher here. I suppose one of the standouts for me here today in this market is the Russell 2000, which has been kind of underperforming for quite a while now. Small cap stocks are usually very interest rate sensitive. So the fact that we got a relatively friendly number there on the inflation front this morning, that makes the small caps quite a bit happier. And actually, for those of you who want to quote unquote trade the market, it's not a bad idea to follow what the Russell 2000 is doing and then take your lead for the big boys off of the broader market. Anyway, so having said that, you can see energy not very happy here. Incredible how smaller the whole energy sector of the US society is getting, smaller and smaller and smaller. And these guys are just getting bigger and bigger and bigger, and they'll probably take over this whole screen at one point down the road here. I wonder, if we ever get to the point where, the politicians actually start saying, you guys are getting a little too big for your britches. And, they did try to break up Microsoft last cycle. Maybe we find that they try and break it up again. Who knows? Anyway, only time will tell. Green across the board. Although not stunningly so with regard to like sort of big major indexes. I get the idea that generally speaking, a lot of the stock market is kind of just flattish here. And I'm a little worried that, it's not really like the market's egregiously overbought, but rising wedges usually historically, there needs to be some sort of correction to them, but we'll see what happens. Anyway, so ironically enough, from a breadth perspective, stocks really aren't that alluring. What is alluring here? I will say that, we had the US dollar here booming higher in the short term, flashing an overbought condition for the US dollar index, or conversely, an oversold condition for all the major trading pairs. And we follow 7 of them here on the platform, and they were all uber bearish. And that in itself is actually a warning that, hey, maybe we need to see some sort of short-term pivot here. And again, on that inflation data on the number this morning, and the irony of it all is that this isn't deflationary. I guess you'd call this disinflationary. Core rate month over month came in a tick lower than expectations. So I think right out of the gate, the market was like, oh, phew. I've been talking to you recently about how energy prices have been falling precipitously. And that's, I think, being baked into the data. Keep in mind that these inflation numbers are a little bit old. Basically here since about the middle of April, we've been grinding our way lower here on the crude. I've said to you all repeatedly that you want to keep this really, really simple, follow the inflation story, just follow crude oil prices and energy prices. And of course, the politicians and the woke people of the world that hate oil and that would love to have our society all drive electric cars, which of course doesn't make any sense at all. they've really tried really hard to almost make it like oil is sort of like, well, oil's not important anymore to our society, so disregard it. But, our whole inflation push through the beginning of the year, well, you can see the oil price basically bottomed, seasonally by unleaded middle of February, sell at the middle of May. You made money 9 out of the past 10 years. I guess this is going to now be 10 out of the past 11 years kind of idea. So really business as usual. I guess the point that I would make here, though, is you notice over the past week or so, whatever sort of gains that we had in the oil price heading down and that being disinflationary, gee whiz, they're taking that back in a hurry. So you could make the argument that we're probably going to see those inflation numbers, month over month, 10th, 11th, 12th of June here, 10th, 11th, 12th of May. We're basically going to be unchanged. So I think you're going to see that in the inflation data. And I think that's basically what this is. We did have energy prices come down precipitously from the April peak. And so what a big surprise. As we said there, the May CPI data is basically reflecting this fall. Not really a big surprise. Probably this coming month, and of course this is now, who knows what the heck this price is going to look like by the time this next monthly report comes out. But my hunch is that when they price in the inflationary pressures for the month of May, it will also be relatively flat. Do we then in June have to start, month over month comparisons, start talking about rising pressure again? I suppose we'll cross that bridge when we come to it. In this kind of environment, I don't necessarily think that this is a cause for the Fed to cut interest rates. They really only want to cut rates when it's sort of like, oh my God, something broke, and oh, look at the market crapping out, and whoa, everybody's losing their job. We better stimulate the economy, yada yada yada. And as I showed you with the S&P 500, I suppose these day trading charts aren't the best place to show you. But where's the best place? I guess back over here. ES making new all-time highs. How on earth is the Fed going to justify? Whoops, that's where I just was. How on earth is the Fed going to justify cutting interest rates? Well, that's a DeFi, so don't need to be there. Let's see. Oh, it's one of these damn buttons. Over here. How's the Fed going to justify cutting interest rates in the face of the stock market making new all-time highs? I don't see how the hell you can have that happen. So also too, something that's a little bothersome here, and you might want to write this down as sort of like a little note to watch for in the future. They usually say it's a bad sign if you see the market rally into a Fed announcement. That's usually not a good sign. We would actually prefer to see the market sell off into a Fed announcement, sell the rumor, oh my God, the Fed's going to cut rates. Oh my God, the Fed's going to cut rates. Or excuse me, the other way around. Fed's going to raise rates, Fed's going to raise rates, and they sell the market off. And then, kind of like this scenario here, sell the market off. And what comes out the other side? A big monster rally. So the fact that they're rallying the market into this FOMC announcement, that leaves me a little bit skeptical into itself. So that's a little bit bothersome. Of course, like I said, we'll have that announcement here in about 2.5 hours. And I didn't see anybody write it down in the comments, so I'll just tell you now. The rule is don't trust anything you see in the market for 1 full hour following the Fed announcement, which means usually it happens around 11:30 my time in a couple hours. Then, they injected this press conference 10, 15 years ago because so many people would do absolutely nothing for a full hour there. And they're like, okay, we got to fill the space in somehow. And interesting enough too, and I just noticed this looking at this now, you could make the argument that we've had this long-standing bullish harmonic pattern working, and this AB equals CD price objective has been floating out there since basically last November. This formation has started, and it sort of kicked in earnest in January, and now we have finally hit that AB equals CD objective. So that in itself is another reason for me to go, well, do I really want to get too bullish right here? I don't know. Um, so, I mean, that's the stock market. As I had said there a few minutes ago, currencies, we had talked about this recently. US dollar rallied smartly off of the jobs numbers. Basically, the economy in the US very, very strong. We've banged into this is a really long-term trend line. I suppose I don't really want to screw up my charts too much. I don't know whether I can zoom out to show you that, but this trend line goes back off of this original market structure top. So that's a pretty darn important trend line there. So you can see how we just banged into that. And then, of course, we also had a 2.618 foggy boggy off of this double bottom. So in a weird sort of way, and this is how I'd like to see everybody use the dashboard. Dashboard was basically telling us, be careful here in currency land. Most of the major currencies versus the US dollar are egregiously oversold. So don't get too bullish on the US dollar here in the short term. Medium term, though, you can see we're only at minus 42 here on the currencies. So you might even find that, with the precipitous sell off in the US dollar, and of course, this is predicated on everything staying the same. You might find that, but in 2.5, 3 hours after Jerry's spoken here, the whole damn thing reverses. We could very easily find Jerry comes out and says, one day of data is great, but I want to start seeing, 3 or 4 months in a row of this data consistently trending lower. And I hate to say it, folks, but 3.4% core inflation rate, that's still way too high. I mean, basically, this thing has to fall almost in half just to get back to sort of their objective, right? They want 2%. So there's still a long way to go here. I find it hard to believe that they're going to actually talk about cutting rates. What I think is happening here, like I said before, is they just, energy took a bit of a pause, seasonal top, sell in May and walk away, blah, 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 blah. So let's see whether this tracks through the summer, through the election. And you also might argue to a certain degree too, would a politician who's in power right now do everything in his power to try and finesse the data over the next 6 months to ensure that he stays in power? And would it be in his best interest to bring that oil and energy price down so that the consumer's feeling a little bit better about this whole inflation conversation? You all know the answer to that. So, now there's your backdrop of what I see happening in the market right now. And I'd be very, this is bothersome that the market is so up ahead of the Fed announcement. And I don't know. I mean, the interesting thing is we had Stewart on the Afterparty call yesterday, and he did talk a little bit about Apple and what the developments that he saw going out of the company. He wasn't really, and he's a big fan of Apple. And he wasn't overly impressed with what he saw there. Now, it might just be purely a chart function. If anything, I think we did see that a couple of the econ numbers themselves, I suppose, we're kind of running out of time. I don't want to get into that. Maybe we'll look at that another day. But yesterday it was up 5%. Today it's up 4%. Is that maybe a little bit too far, too fast? I don't know. Seems a little suspicious. And interesting too, what a dichotomy. Google and Meta and Amazon basically doing nothing here. It's just these guys all going crazy here, driving the NASDAQ. Anyway, we'll see. I can't, and actually somebody even tuned into the daily into the lounge this morning and said, man, I can't wait to hear what Brian has to explain what's going on in the market. And I'm kind of like, I don't know if I can give you the answer. My answer might be, and actually they said, if anything, it's good that Brian's not going to give you a bullshit answer and some, blowing smoke up your ass. Sadly, I might even just be sitting here just going today, I don't quite understand exactly what's going on here. I need more time to just sort of let this settle out and see if we get some actual trends developing here. Because, what I showed you off the ES chart, that's not encouraging. We just hit big technical objectives. We're making a rising wedge. Breadth is not really pushing this market. And you can see brick and mortar and sort of the rest of the economy is just kind of like, meh. There's nothing really to write home about here. So it's just, these usual, and, we might be in this kind of environment where the next 10, 15 years, in the 1940s and 1950s and early 1960s, they called it the Nifty 50, where there were just a basket of stocks that drove this whole economy. Yeah, we might see exactly the same thing happen here with these crazy tech stocks. So I mean, hell, I could probably sit here and talk for the next hour about the breadth and the market and stuff here. I do like what I'm seeing out of the tools on the site, and if anything, there's one message here today that if you are a crypto fan, this should put a really big smile on your face, especially about everything that I just talked about. Yesterday, when we had Stuart on the call, Mr. CTO, we had talked a little bit about how, let's see if I can get this thing to cooperate. Don't move. Don't move. No. Come on, you. Oh, Jesus. Okay, there we go. So yesterday, when we had Stuart on the call, we talked about the potential that crypto might be getting washed out. And as a result, we might be seeing the market actually turning around pretty soon, because this is, I think, is where our breadth indicator is just absolutely awesome. If you ever see short-term and medium-term get both egregiously oversold, that actually is trying to paint some sort of pivot bottom. So you notice that we had short-term yesterday at minus 80, but we had the medium-term at minus 73. So we were almost there, but not quite. Now, of course, you all know we had a pretty big drubbing there in the crypto market past few days. And so as a result, that drubbing has actually caused our histogram to go minus 80 on the short term and minus 86 on the medium term. We are now officially egregiously oversold. And of course, you've heard Brian talk at length about how what I really want to see is I want to see us get through this July 1st event window, because usually what happens is the market likes to top out around my birthday. And in this case, actually, we put in a pivot low around my birthday. Although this is the total, slightly different. Let's go back to that daily chart. There we are. And really all we've done is just grind sideways here for a few months, cleaned out a lot of the weak hands. But we're getting to the point. There's July 1st, or I guess that's forced. But anyway, through that July 4th holiday weekend, that's usually when the market pivots. So I can tell you, here we're the middle of June, we're getting awfully close to some sort of pivot. Thought it was interesting that I think crypto is actually going to be used as a bit of a political football. And sort of you saw the breadth indicator. And when we look, this screen might not load, but okay, there it did. But when we look, even for our fundamental names that we really like at TRI, you can notice they were getting their lunch handed to them the past little while. It's been a tough market. And of course, my little old lady account, you can see they're all going from the upper left to the lower right. Well, maybe that's a bit overdue to come to a fruition. And what I did notice, Chris had pointed it out, was Mr. Trump seems to be courting crypto. And one of the news articles that caught his attention here this morning was the fact that Trump is meeting with crypto miners and wants, basically remaining Bitcoin made in America. Oh boy, it's going to get her all happy. So what Riot, Mara, I suppose we could look at this Clean Spark. I just pulled up a quick grid of the crypto stocks, and interesting, nobody's talking about Hut mining anymore. I think Hut looks like it could really rock and roll here. There's Riot trying to put in a cute little W today, gapping higher. Mara's got a half decent bottom. Actually I really wouldn't mind looking at is good old Novogratz. We haven't really heard too much out of him lately. I think it's Galaxy. Yeah, there he is. Galaxy Digital US. This is a Canadian listed company. I think if anything, Novogratz one day wants this thing listed down in the States. So that's probably, we know Novogratz is back in the spotlight when he's getting his listing down in the States. It might be listed in the States, I'm not sure. But anyway, point of the matter here is these guys are kind of looking uppy. Looks like Marathon and did gap higher, so it does have a bit of wiggle room. But geez, look at that Riot! What a cute little W there. And then that Clean Spark. I guess that's the I don't know, the crypto miner du jour. Caught a nice bid, gapped higher. So I'm starting to feel as though we're slowly turning the corner here. I don't know whether I'm outright bullish just yet, but we are coming near the end of the seasonal window. I think crypto is a political football right now, which means that the last thing in the world Biden's going to want to do is absolutely shit on the crypto space because he's going to alienate a whole bunch of you Americans. I don't know if there's any Americans watching this. Um, but he's gonna, anytime you come across as like regulating and beating up on people and stuff like that, obviously you're going to alienate voters. So to a certain degree, as I said, Mr. Trump's actually been courting the crypto audience, and I think the crypto audience kind of likes Mr. Trump versus Mr. Biden. So as a result, I don't think that Biden's going to take the risk of actually crapping on this space. And we did have one analyst at TRI, good old Sonny out of Europe, and he's actually said that historically, in pre-U.S. election years, usually the market actually finds a half decent footing through the latter part of the spring, and we don't have that crash scenario. So it's looking encouraging. If anything, I got together with TRI's CTO late last night for me, early morning for him. Trying to get our head wrapped around what I'd like to do is actually start now that all these names, little old lady, all these names are basically back down at or near reload zones. I want to go and pick up a whole bunch of this stuff, and I probably will be on the buy side over the next couple weeks. Just all the names that I banged out doubles and stuff through the winter there. I'm probably going to be going and reloading a lot of those names. So we are into the seasonal window when we should see bottoms. Maybe it takes the next couple weeks to develop. One thing I will say is I did have some happy little shorts and stuff working on the market. We were looking brilliant yesterday. And then, as good best practices, if the market does move in your favor, you don't really ever want to see a market that you're kicking butt on come back against you and you actually see it turn into a losing trade. So I did move my stop to scratch yesterday on this Bitcoin trade, which I think is a relatively smart idea. They rallied it right up into Mountain Man level here, which ironically enough, if I wasn't short, I probably would have been hunting a short, and they just stopped it on a dime. So I got stopped on my short on Bitcoin. But I did find interesting, though, is that the Ethereum short is still working. It did have a dead cat bounce. You can see the moving averages still pointed relatively bearishly. But, if this thing comes up to that scratch level, I do have my stop sitting at scratch. Can't see it here right on this, but if we do come back to this scratch level, I'll hop off on that trade and just let the dust settle. One thing that it kind of bummed me out was I was in this short, as you can see, got stopped out on this M top breakdown here, or breakout, I suppose, fail of the M. And then the damn thing puked out, and I just simply said, if we come back to Mountain Man, I might even think about strapping this back on. So we'll see how this plays out. This is more like lower time frame trader trade, all that kind of talk. I will say that these short kind of thinkings, these short leanings, the seasonal window for that bearishness is running out of time. As I had sort of said to you before, this market has actually gone sideways now for literally about 4 months, right? 1, 2, 3, Yeah, basically the better part of 4 months here. And they always say if a market can't go down, maybe write this down. This may be a good little reference for you. If a market can't go down when it's supposed to go down, then what's it going to do when it's supposed to go up? And as I said, we're nearing the end of this seasonal window when the market is supposed to go down. So the fact that it's not going down when it's supposed to go down, and every time we get these fail signals, the market quickly ratchets right back. And, I got stopped out on the Bitcoin short. Still have the ETH short going. It wouldn't surprise me if this gets blown out here. I just live by the sword, die by the sword. It's a trader's life, no big deal. But I think, if anything, a powerful message from the market right now is be careful being too bearish here. This market just does not want to break. It's having a really hard time breaking. And, should we, kind of stabilize here and then start to set up like momentum indicators and stuff actually start bottoming out, this thing could take off like a rocket here. So if anything, that should put a smile on all of your crypto fans' faces. Brian bearish, when it is appropriate to be cautious and warn you, don't chase, don't chase, don't chase. I mean, I suppose the good part about the broader crypto market is it's kind of gone sideways. A lot of the little names, people that are playing the shalt coins and all that kind of stuff, they got really beat up here over the past couple months. So I hope anybody who's relatively new to the space hasn't lost faith. As I said, like a lot of these names just got absolutely crushed here. Like this Hello is such a good example that I've actually been talking to people about. Hey, if you actually are here to make money from trading, then you've got to step up and start paying attention to a name that's fallen 90% from its peak, because at some point it's going to have its 50% bounce. That's just TA 101. So, if anything, this is a good message. Ironically enough, the end of this broadcast, in that I think it's almost like we're in a tunnel. We've been in this dark tunnel now for the past 3 months or so. Don't chase, watch out for the Gucci sweater wearers, all that kind of stuff. But we're getting to the end of the tunnel. And when this stuff does start Wing out and we start seeing, momentum indicators and stuff starting to turn up, which I don't think we're quite there yet, but we're getting pretty darn close. This is, I think I showed you that seasonal chart, Bitcoin's, well, now actually more kind of like the conversation about crypto rather than Bitcoin, but of course I lost all my damn charts. I can't show you. But anyway, I think I still have it over here. I have one of the charts. I think it's this one. This is not the time to get uber bearish of crypto. So, yes, we're looking for a correction following the halving event, but in a weird sort of way, kind of like 2015, which I think this market is a lot like, which is over here. We had our halving event, we had our correction, and then, oh boy, look out. So, yeah, I think that's going to be the message for today. Geez, went about 10 minutes over. Sorry. Timing police. I was probably a little dawdly there today. So, there's your backdrop. We'll throw up a FOMC meeting group for the FOMC meeting coming up in about a couple hours. That's always a fun thing to do. And we'll just chit chat and sort of talk, make fun jokes about who wants Jerry's baby and all that kind of fun stuff. And then, of course, watch the fireworks through the actual event, and then sort of how does that set us up coming out the other side. And I wouldn't get into the business of predicting one way or the other. What I do find it interesting that, if we look at the ET, you know what, I got to stop talking. Let's leave the free broadcast at that for today. Be sure to watch out for the announcement for the Fed meeting. And if you want to come in and have some fun and watch Jerry, do his little dance with the Beamish's commentary in the background, watch out for those links. We'll post them in the lounge. We'll probably tweet them out and that kind of stuff. So we'll see everybody in a couple hours. All right. Have yourselves a great day. All the best. And bye for now.